Hello, my name is Shannon Dunsmuir, and today we're going to talk about a Think Aloud strategy. So what is a Think Aloud? Thinking is the internal, individual process that you go through in order to interpret data or solve a problem. The thing is, no one else has any idea what's going on in your head unless you share it with them. So a Think Aloud is a process in which you verbalize your thoughts out loud. It can be a great tool that's used by teachers to model something to their students, such as what I'm going to do today, or by students to showcase their understanding to their teacher. Today, I'm going to do a Think Aloud modeling how to read a fund profile for a mutual fund. A fund profile is a required document for all banks and companies that offer mutual funds. It outlines a list of important information regarding the fund. That being said, there's almost too much information on it, and it can be very confusing. This is important for financial management courses offered under Career and Technology Studies. We're going to look at a fund from Bank of Montreal. The fund name is BMO Precious Metals Fund. So right away we can tell from the title that this fund is a sector-specific fund, which means it vests into a particular area of the market. So what that tells me is that I first want to look at the sector allocation. That's down here in the bottom right. Normally, when something is broken down by sector, it doesn't break it down any further than precious metals or energy or financials. But this one, because it is already sector specific, goes into more details. First interesting thing I see is that this fund is almost 69% into gold. What that doesn't tell me is how you're investing into gold. Is it actual gold bricks? Is it pieces of paper representing the gold that's housed by someone else? Or is it companies that distribute gold or find gold in the first place? Then there's precious metals and minerals, diversified metals and minerals. Most people, when they buy precious metals, are typically looking at gold or silver, but there are other options out there, such as platinum or palladium. Next, you can see money market investments. That usually means cash. And then actually further down, you can see a listing of cash. So what that means is they're actually classifying them separately. I'm not sure why they would do it. Normally cash and money market do get lumped in together. So if we look up top here, you can see portfolio allocation. So they're actually looking at geography. Interesting thing here, 72% is invested into Canada. I see that's interesting because the fund wasn't called a BMO Canadian Precious Metals Fund. It just said precious metals, which seems to me to indicate that there wasn't any sort of preference geographically. But this list would say otherwise. On the left-hand side, we see a top 10 list, which is a required portion for every fund profile. So on the top 10 list, there are lots of companies. Most interesting thing to me on here is number 5, Bank of Nova Scotia gold certificates. A gold certificate is that piece of paper representing gold. So you're not actually having to house it in your house or in the bank or storing it somewhere yourself. You just have the paper saying that you own X amount of gold. The next interesting thing on here is Government of Canada Treasury bills with an interest rate and a maturity date. Now, it's October 2014, so I know that this date has already passed, which means they've probably moved these funds into something else by now. I'm not sure what though, because the information is a little bit out of date. Now, one of the advantages of a mutual fund is supposed to be that the diversity you get lowers your overall risk. So the total investments in this fund is 72, the top 10 of which take up over 40% of the fund itself. What's interesting is that normally if a company isn't doing well, maybe something else in the fund will make up for that. But because this is all within the same sector, chances are if one gold company is not doing well, another one's probably not doing very well either. So that will increase the risk overall. Now, while I say risk, a bank typically tends to refer to the fund's volatility. Volatility is a way of measuring risk because it looks at the changes in the fund over time. So as we can see from this graph down here, this fund is fairly volatile because while it's down one year and up the next, it's sort of a roller coaster ride. High volatility does typically mean higher risk, and this fund is very high, mainly due to the fact that it is sector specific and it is so dependent on what's happening, in this case, almost exclusively into gold. Another thing an investor might want to look at is the cost to buy or sell the fund. These funds are all no-load funds, which means you're not actually paying anything to buy or sell the fund. Most banks typically have that sort of setup. They make their money off of the management expense ratio. I don't really pay too much attention to it. They're usually between 1% and 3%, depending on how heavily research heavy this fund is. Lastly, when we talk about past performance, it's not really something I look at either. Just because the fund made 72% one year and then 59% didn't mean that it was going to continue to make high returns, as we can see. What happened in the past is not an indication of what's going to happen in the future. After I do an analysis of the fund on my own, I always go back up to the top where it goes, what does this fund invest in? And make sure that the fund mandate matches with my own sort of guesses about what the fund is supposed to do. So if we look on here, it can say, you see that it's supposed to invest in securities of primarily Canadian companies in the precious metals industry. We got that. The fund invests mainly in Canadian companies that are involved in the exploration, mining, production, or distribution of precious metals. Again, that was something I sort of thought. And finally, the fund may invest up to 30% of the purchase cost of the fund's assets in foreign securities. Again, I said it wasn't called a Canadian precious metals fund, but it is obviously part of the fund's mandate that no more than 30% be invested outside of Canada. Thank you for listening. I'm confident that my presentation today has given you more insight into both mutual funds and what a Think Aloud looks like.